Hey everybody, Rob Maurer here, and today we are continuing our discussion on Tesla's second quarter earnings report. Yesterday we went through a lot of the financials and Tesla's announcement about Gigafactory Texas. Today I want to go through more of the takeaways from Tesla's conference call. Tesla stock on the day today, probably not the reaction everyone was hoping for from the market, but finished down 5% to $1,513.07. That did compare to the NASDAQ though, with a rough day as well, down 2.3%. And if we look at the charts, the direction of moves were pretty similar, with Tesla's movement just being a bit amplified from the macro environment. Given the rising expectations heading into earnings, which as we discussed, the whisper number that was posted by Barron's was for a positive 50 cents per share, which of course ended up being the number, I don't think it's too surprising to see Tesla not deviate to the upside from the macro environment here, especially given the outsized impact that regulatory credit sales had on that earnings number. But as we talked about yesterday, even stripping out those regulatory credit sales, I'm still very happy with the financial results Tesla posted. Oftentimes, it just takes a while for the market to really figure out what it wants to do. For example, after the pretty good results from Q1, Tesla stock was down about 12% 2 days afterward, but 2 months afterward was up 40%. And Tesla's performance today, not really all that bad compared to other stocks. Apple, for example, was down 4.5%, Amazon down 3.5%. All right, that being said, let's go through some of the main takeaways from the earnings call. I want to start off here with batteries, autonomy, and then I think the third leg of the triangle, manufacturing, which Elon reiterated on this call he thinks will be the long-term sustainable advantage of Tesla. We talked a little bit about this yesterday, but I think one of the most interesting points that Elon made on batteries was on lithium iron phosphate versus nickel manganese cobalt. As we have talked about in the past, lithium iron phosphate isn't as energy dense as nickel manganese cobalt, but Tesla has made such progress in their powertrain efficiency and in areas like heating, ventilating, and air conditioning that they are now able to use lithium iron phosphate in their vehicles and still get an acceptable range. This is important for a few reasons. I think the primary reason is because as Tesla continues to try to ramp very aggressively, they obviously need a lot of batteries. Elon did address their constraints on the call, and he said pretty much at any given point in time, there's going to be some constraint within the battery supply chain, and whatever that constraint is, that's going to be the thing that determines their rate of growth. So if Tesla can now use two different technologies, two different cathode chemistries that allow them to use different raw materials, that diversity in supply chain or the addition of another chemistry supply chain should really help them grow more quickly. And Elon was very complimentary of the supply chains that exist in China, and China is very heavily focused on lithium iron phosphate. Additionally, my understanding of the raw materials is that they should be cheaper for lithium iron phosphate, though sometimes those equations are not as simple as they may seem because you need to factor in things like using more cells of lithium iron phosphate to get the same energy that you could get from fewer cells of nickel manganese cobalt, for example. Regardless though, if you are ramping production aggressively and plan to continue that for a long time, that diversity of resources is really important. You don't want to put all the pressure on one resource. If that resource is scarce, obviously that would cause the price to rise. And as we heard Elon say on the call yesterday, Tesla really needs nickel. Utilizing lithium iron phosphate reduces that need a little bit. Still though, there are cases where Tesla's going to need that higher energy density associated with nickel manganese cobalt. Elon mentioned that that would be the case for vehicles like the Semi and the Roadster. While we're on the Semi here, I'll just round out some of the comments on that. Unfortunately, we didn't get any information on a production rate target for the Semi, and despite that leaked email from Elon saying it was time to bring the Semi to volume production, Tesla did reiterate in the update letter that deliveries for the Semi will start in 2021. They stated that again on the call, and also said, as they have said in the past, that the first deliveries of the Tesla Semi will be to Tesla itself for essentially more extensive long-term validation, though they did add that some long-term loyal customers will also get some Tesla Semis early on. Other points on the Semi, Jerome, I believe, and Elon emphasized that they were able to think about ramping the Semi now because of some reductions in battery constraints that they are anticipating. A lot of that is the lithium iron phosphate stuff that we talked about, but they did tease things that they have planned for Battery Day. Elon also said that they continue to expect to expand battery supply with others. I think he specifically mentioned Panasonic, LG, and CATL, but then also said that there will be more on that subject on Battery Day, implying that Tesla will do further vertical integration in the battery supply chain, or at least that was my take. Oh, and also last thought on the Semi, it's always fun to hear Jerome talk about it. He's clearly very excited to get it rolling, and he mentioned there's a lot of new things that they've integrated in the Semi, which are pretty impressive, so a lot to look forward to there. Alright, next up I want to talk about autonomy. We've heard Elon talk about a lot of these things, but we did get a little bit more context or details on autonomy in general. Specifically, Elon talked about how he has been testing the newest update of Autopilot, which of course is the core rewrite version, which he essentially described as the difference between looking at a picture and going to surround video, explaining that today autopilot essentially functions in 2.5 dimensions, the 2D being looking at a picture, and then the half a dimension being what he described as a harsh correlation with time, but not really a good one, and then described the new core rewrite as being 4-dimensional, so 3-dimensional visual space, with the 4th dimension being a smooth understanding of time. Elon noted that it's really difficult to convey how much better a 4D system works. Elon mentioned that he has of course been testing the core rewrite in his vehicle, and that it really is profoundly better than people realize, saying, quote, really profoundly better, it's like amazing, end quote, and that it's getting close to being able to take him from home to work without any interventions, despite going through intersections, of course, and things like construction zones, whatever the case may be. He said this will probably roll out later this year, and it would include things like traffic lights, stop signs, turns, pretty much everything, basically what Elon refers to as feature complete, and then begins the long march of nines, meaning 99.999 repeating, to eventually become more reliable and way better than humans, and he said, quote, that's actually going to be the real work, end quote. Elon, as he has done in the past, talked about how when that moment comes where Tesla can turn on the robotaxi network, meaning that March of Nines has become reliable enough, it has the potential to be the moment with the biggest asset value increase in history. Later on in the call, mentioning value of about $100,000 per vehicle, and he said by the time that happens, it could be a few million vehicles, and the simple math on that, 100,000 times a million, is $100 billion. So Elon is thinking on the scale of hundreds of billions of dollars of asset value creation, though of course not every single Tesla that has been sold and is capable of being upgraded to a robotaxi will use the vehicle for that purpose. And of course, these are all projections at this point in time anyway. All right, next up here, I want to talk about manufacturing. Tesla discussed a lot on manufacturing on the call, which I really enjoyed hearing about. Elon, as I said that he believes the long-term sustainable advantage of Tesla will be manufacturing, and also said if there's one thing that comes out of the call, he would like it to be well known that Tesla needs people to work on manufacturing, and if people are interested in that at all, that it is a critical position at Tesla, and that there is so much more opportunity, 1,000% or 10,000% more opportunity for innovation in manufacturing than there is at the product level. But really at Tesla, the two are heavily intertwined. Product decisions are made with manufacturing in mind, and over time, Tesla continues to advance that. Elon said that they're getting way better at making cars. Gigafactory Shanghai is evidence of that, and he said even more evidence of that will be the progress that they make from Giga Berlin. We can now add Giga Texas along that pathway as well. Jerome, when speaking about this, said that they really have been focused on increasing their capital expenditure efficiency. This is something that we really dove deeply into, I don't know, probably 6 to 9 months ago when Gigafactory Shanghai was ramping up, because at the time, for example, in the Q3 shareholder letter, Tesla said, quote, Gigafactory Shanghai was built in 10 months and is ready for production, while it was about 65% less expensive, capex per unit of capacity, to build than our Model 3 production system in the US, end quote. So as we talked about, there's depreciation and amortization off of that capital expenditures that affects your gross margin. So to be able to reduce those capital expenditures for the same output by 65% is crazy progress, and even today is still overlooked, in my opinion, by the market and probably even those that are bullish on Tesla. So yeah, I would agree, Tesla is getting way better at making cars. Elon put this really, really well, very succinctly. He said better factories for less money in less time. That's what Tesla has done. That is clearly what they are still attempting to do. And that is how you grow at 50% compound annual growth rates for 10 years. I expect we'll hear more details on how Tesla is exactly doing that at Battery Day. All right, moving into other areas of the call, I want to start with Tesla Energy. We did talk a little bit about this yesterday. Obviously, the energy storage deployments in Q2 surprised me well ahead of my expectations. So I think that's really encouraging. Tesla talked a lot about the Megapack and how they have gotten to profitable margins on that product. And Tesla also disclosed that they installed 3 times more solar roofs in Q2 than they did in Q1, which I think is great progress given the circumstances, though of course we don't know the base that they started from in Q1. And they also talked a little bit about AutoBidder, which Elon made sure to emphasize was not high-frequency trading, or more precisely, not just front-running of trading, but essentially just the technology that is required for super smooth integration into the grid to do with all the demand variances and the supply variances, especially that are introduced by sources of renewable energy. Drew said, quote, "You can't plan power plants on an hourly scale in a renewable world. You need to optimize them on a minute-by-minute scale, and that's what we're doing," end quote. On overall Tesla Energy, when the question was asked about Wall Street seeming to ignore Tesla Energy, Elon laughed and said he cannot emphasize enough that he thinks long-term Tesla Energy will be the same size, roughly, as Tesla Auto. He pointed out that the energy business is a bigger business than automotive, and this is something that we saw signs of as well in Tesla's impact report, where on page 4 they break out contribution to global greenhouse gas emissions by economic sector, showing electricity and heat production at 31% of the total, creating almost twice as much emissions as the total transportation market, which Tesla lists at 16% of emissions. Tesla puts asterisks on both these categories and denotes that the asterisk indicates Tesla-related sectors. So while I don't think we got anything from that answer that's really going to help Wall Street model it, hopefully it is similar to the question on the last call about Tesla's compound annual growth rate ambitions to get analysts thinking a little bit more about what Tesla is really aspiring to achieve. Which, side note, that question from the last earnings call does seem to be catching on a little bit. Obviously, we heard Alex Potter from Piper Sandler refer to it, and now Dan Levy of Credit Suisse, in his question, asked for a little bit more detail on how that path to 20 plus million vehicles develops. Elon basically said we'll do the obvious things, probably a smaller compact car, as well as a high-capacity vehicle. By the way, thank you to those of you that did upvote my questions on say.com. I felt a little bit uncomfortable having all 3 questions. I'm definitely going to limit myself to just 2 next time. Definitely don't want to monopolize that opportunity for other investors to get their questions asked. All right, next up, I want to talk about Tesla insurance. This was really interesting. Zach joked that they get asked about this on every single call. So he kind of just broke down and was like, all right, I'll finally give you some more detail on this, which I thought was awesome. But he said, essentially, the product is going well in California, but it has not been rolled out to other states because really the California product is version 0.9. And while they could have rolled that product out to other states, they decided that wasn't really in their best interest because what they're working on and what their true vision for the insurance product is to incorporate a lot more of the telematics data that they have in the vehicle. So Zach said that they're making really good progress on that. They're using the data captured in the car and assigning that data to a driving profile of the person driving the car. I thought that differentiation was really interesting. That hints at tying insurance to the person rather than the individual vehicle, which I think is pretty cool. And then of course they talked about how Tesla can leverage the unique data set that they have to build a more optimized insurance product. Elon jumped in after Zach and said that they are building a major insurance company within Tesla, and they really want people to come help them build that. He said if there are any high energy actuaries that are frustrated with how the status quo in the insurance business is today, that they should join Tesla because Tesla wants revolutionary actuaries as they revolutionize the insurance business. For some additional context here, ibisworld.com puts annual automotive insurance revenue at $310 billion just in the United States. So it's a pretty big business, and I think more importantly, that means it's a pretty big cost for vehicle owners. AAA's estimate is that for a midsize sedan, a full year of insurance coverage is about $1,200 on average, $1,250, whereas they estimate the total cost of ownership for that vehicle each year to be anywhere between $7,500 and $10,000 based on how many miles it actually is driven. So at the midpoint, insurance would represent about 14% of that total cost of ownership each year. We know Tesla loves to optimize, and we know they love to drive down costs through optimization. That's a big chunk there for insurance that they are targeting. Last quick thought here on earnings, and then also let me know what you guys think in the comments or what I may have missed. But they did talk a little bit about software, non-autopilot software. Zach said that obviously they are putting the plumbing in place for the potential development of that business in the future. But Elon also noted that that potential pales in comparison to what they could unlock from full self-driving. He said if that's $100,000 per car, that it's, quote, a lot of software you have to sell in the App Store or whatever, end quote. Last couple of quick things here. We have seen a number of different price target increases today from analysts. I won't spend the time to go through all of those individually. And then we also today did have a corporate family debt rating upgrade from Moody's for Tesla from a B3 to a B2, which is still speculative grade. Moody's says, quote, the upgrade reflects Tesla's sustainable position in the auto industry as a specialized producer of pure battery electric vehicles, however, preserving the strong position in BEVs in the face of emerging competition challenges will depend on Tesla's progress around manufacturing efficiency and product development to achieve even broader customer acceptance at an affordable price. Moreover, Tesla's expansion prospects benefit from regulatory pressures on the auto industry to reduce emissions, so Tesla's advanced position in BEVs is an important factor at the higher rating. At the same time, the weak corporate governance at Tesla also constrains the rating, end quote. Which, I'm not going to lie, the first time I read that, I did chuckle at that last bit. Finally, just a couple thoughts that I'll end with here. Elon on the call said the demand is very strong. To me, it seemed like it's not even on the radar as far as being a constraint right now. And he also said, quote, I've never been more optimistic, more excited about the future of Tesla in the history of the company, end quote. I think that's a great way to leave it for today and likely for the week. I do have some other things that I need to be taking care of tomorrow, so barring anything crazy, the next episode will probably be on Monday. If that ends up being the case, I hope everybody has a great weekend. Make sure you're subscribed here and signed up for notifications, as well as following me on Twitter at Tesla Podcast, and I'll see you next time for Tesla Daily. Thank you.